For an active duty service member, buying a home with a VA loan can be an incredible benefit. But the process works best when you understand what the lender will need, what happens after you go under contract, and which military-specific issues can delay your closing. The first step is confirming eligibility. An active duty service member generally meets the minimum service requirement after serving at least 90 continuous days. Your lender will also obtain your Certificate of Eligibility, commonly called the COE, to confirm your entitlement and eligibility for the VA program. Because you are still serving, you may not have a DD-214. Instead, you should expect to provide a current statement of service signed by your commander, adjutant, or personnel officer. That statement should include your name, social security number, date of birth, date you entered active duty, any lost time, and the name of the command providing the information. Your lender can often retrieve the COE electronically, but complicated service records or previous use of entitlement can take additional time to review. You should also be prepared to provide recent leave and earnings statements, bank statements, identification, W-2s when requested, and any PCS or relocation orders affecting the transaction. The lender will review your base pay, housing allowance, subsistence allowance, special pay, debts, credit, available funds, and residual income. Pay close attention to your expiration term of service date. If your ETS date is within 12 months of closing, the lender may need additional documentation showing that your military income is likely to continue. That could include re-enlistment or extension documentation, a statement that you intend to re-enlist, confirmation that you are eligible to re-enlist, or evidence of qualified civilian employment after separation. Do not wait until final underwriting to address this. PCS orders create another important issue. The lender must understand where you are currently stationed, where you are moving, when you are expected to report, and which housing allowance will apply. If your BAH will change, the lender may qualify you using the lower amount unless the higher amount is properly documented and expected to continue. The home must also be intended as your primary residence. If you will be deployed, temporarily assigned somewhere else, or unable to occupy immediately, tell the lender at the beginning. In some situations, occupancy by a spouse may help satisfy the requirement, but the exact plan must be reviewed and documented. Never assume that having military orders automatically resolves an occupancy issue. Once you are under contract, a well-managed VA purchase often follows a predictable sequence, but the exact number of days is never guaranteed. During the first few business days, you will sign disclosures, provide updated documentation, pay for or authorize the appraisal, and answer the lender's initial questions. The lender will normally order the VA appraisal quickly while the title work, insurance, income review, credit review, and underwriting process begin. The appraisal timeline is not identical in every market. VA publishes appraisal timeliness standards by state and county, and the clock generally begins on the first business day after the appraisal assignment. Weekends and federal holidays are not included. Rural properties, unique homes, busy markets, access problems, repairs, or a shortage of VA-approved appraisers can extend the process. The VA appraisal has two major purposes. The appraiser provides an opinion of the property's market value and reviews whether the home meets VA minimum property requirements. The appraiser may look for health, safety, and structural concerns. Problems involving peeling paint, damaged roofs, unsafe electrical conditions, broken windows, heating, water supply, sewage systems, or access to the property may need to be corrected before closing. But the VA appraisal is not a home inspection. A home inspection is performed for the buyer and provides a much deeper review of the property's condition. A VA appraisal does not guarantee that the roof, plumbing, heating system, appliances, or foundation will never have problems. Active duty buyers should still strongly consider hiring a qualified home inspector. If the appraiser believes the value may come in below the contract price, the Tidewater process may be initiated. This gives the lender and real estate professionals an opportunity to provide additional comparable sales before the final value is issued. It does not guarantee that the value will increase, and the appraiser cannot disclose the anticipated value during that process. If the final appraisal is low, you may be able to renegotiate the price, request a reconsideration of value with stronger market data, pay the difference, or use the VA escape clause when applicable. The escape clause protects the buyer from being forced to complete the purchase solely because the VA established value is below the contract price. It does not allow the buyer to cancel for every possible reason. If repairs are required, the seller must normally complete them before closing. The appraiser or another authorized party may then need to verify completion. That repair and reinspection process can add several days or longer, depending on the work and the availability of the parties involved. While the appraisal is moving forward, underwriting will continue. Expect questions, expect conditions, and expect to provide updated documents. Do not open new credit, finance a vehicle, move large amounts of money without documentation, change your direct deposit, or make a major career decision during the loan process without speaking with the lender first. Even when your loan has been pre-approved, the lender must still verify your financial position before closing. Zero down also does not mean zero cash. You may still have closing costs, prepaid property taxes, homeowner's insurance, interest, and escrow deposits. The VA funding fee may apply unless you qualify for an exemption. Certain active duty Purple Heart recipients and service members with an eligible proposed or memorandum disability rating may be exempt when the required evidence is provided before closing. As closing approaches, the lender will verify that the appraisal is acceptable. Required repairs are complete, title is clear, insurance is active, funds are documented, and all underwriting conditions have been satisfied. You must receive the closing disclosure at least 3 business days before closing, so last-minute changes can affect the scheduled closing date. If you may be deployed, traveling, or unavailable to sign, discuss that immediately. A power of attorney may be possible, but it must be reviewed and approved by the lender and title company before closing. Waiting until the day before closing is how good military loans become emergency situations. For an active duty buyer, the winning strategy is preparation. Get the COE early, obtain the statement of service, review the ETS date, provide PCS orders immediately, confirm the correct BAH, address occupancy before making an offer, order the appraisal quickly, complete the home inspection, respond to underwriting requests promptly, and maintain financial stability until the loan is funded. The VA benefit is powerful, but the benefit does not replace preparation. When the military documentation, property, appraisal, and underwriting are managed correctly, an active duty service member can move from contract to closing with far fewer surprises. Now go win the day.